Good afternoon, everyone. My name is Lawrence Caldicott. I am Senior Content Director for FinTech Connect, and we are proud to be partnering with Telesign in bringing you this webinar this afternoon. We are living in an age of accelerated digital transformation. This is a hugely exciting time to be working in financial technology and payments technology, a time of massive changes. This webinar, entitled Digital Everything, the Changing Anatomy of Onboarding Risks, will look at the role of fraud and AML when going through a rapid digital transformation, as many businesses are in this space currently. We will look in detail today at the challenges of fraud when completing a successful digital transformation. To do that, we have a fantastic panel for you over the course of the next hour. Some real heavy hitters and leaders in this space who I'm sure you will agree have much to contribute. They are Sheldon Turan, Head of Digital Product at Barclays Payments, Ebru Keskin, who is a fraud prevention and payments consultant who has many years of experience at some major retail brands, including River Island and End. Martin Parry, Fraud and Payments Lead Manager at Skyscanner. Martin is also a member of our Payments Advisory Board for FinTech Connect. And Vicky Shang, who's the API Ecosystems Manager at Royal Bank of Scotland. Vicky has also kindly, for the past 2 years, been on our Digital Transformation Ad Board. Bringing this all together and leading the session today, we have Abhijit Singh, Senior Product Manager at Telesign. Abhijit, the floor is yours.
Thanks a lot, Lawrence, and thanks a lot, panelists and the audience, to coming out in great numbers in these times. I mean, when everything is actually over a digital channel, and that's what essentially the theme of today's session also is, right? I mean, where the digitalization has actually taken such a rapid pace across whatever industry we look at. It's just fascinating. But I mean, to introduce the name of Telesign to people who may not know who Telesign is or what Telesign is. I mean, we are a Los Angeles-based company which is into API-based digital identity and engagement solutions, and something which focuses on around phone numbers. So we, for our customers, through API, deliver user verification, comprehensive risk insights, and customer communication. And if you look at Telesign's history, we actually came into this world in the year 2005 on the back of being one of the pioneers in the area of two-factor authentication, which now has become one of the de facto way of verifying an individual or a transactions or even onboarding in many of the countries. And that actually helped us get into many leading names in the online and the digital space. And over the years of doing that, we realized that we sit on such huge intelligence about phone numbers being onboarded across digital channels that it actually made us get into the space of digital identity, focusing on phone numbers. We also services, the communication service as a platform provider, and also phone numbers and anonymous calling services. And that is something which we launched in the year 2016. Something very interesting happened in 2017, where one of the world's leading telecommunications provider, Belgacom International Carrier Services, based out of Belgium, acquired Telesign. It was a marriage made in heaven. Their reach, their telecommunications connect helped us, mature our quality, our knowledge about phone numbers, and also having direct connections and increase in reputation across operators around the world. And on top of that, it also helped BICS fulfill their aspirations of getting into the digital space. We are moving at a very rapid pace, and we are already present in almost all major operators within the European Union and also UK. And over a period of time, we have the aspirations of becoming a much more holistic digital identity provider, not just phone number. Right now, we already are serving 21 out of top 25 web properties around the world, which includes, of course, the biggest names out there, but also not just in e-commerce or marketplace or social media space, but also the financial space and banks. So a lot about Telesign already, and I would focus I'll shift my focus to the panel, and for which you are here. You are not here for Telesign, but to hear what the experts from the industry have to say about the topic in question here, which is about going digital and what kind of complexities going digital introducing into the fraud risk space, right? So if you look at the times we are into, really, really interesting times, right? Where, in terms of what businesses are facing, especially the ones in the financial domain, some of the companies had already gone digital, maybe partially. Some were just starting. Some had it in their 5 or 10-year plan, if you believe it or not. But the current situation which this pandemic has introduced had just put all of these organizations onto a rocket ship for their journey to digitalization, right? Everybody, there is a race to, convert all the channels, all the interfaces which the financial or the digital companies have to convert to go online, to actually serve their customer bases to one of the most easiest ways possible. So that is through mobile or through browsers or through PCs, whatever channel it could be over the internet. And frankly speaking, I never ever imagined going on video call with my bank's branch manager, right? That is something which we never saw happening, just a few months back. So, but for me personally, there was suddenly so much transparency to everything related to financial services, along with having such simple, streamlined processes to serve me as a customer, right? This whole situation, while we are going to touch about some of the gray areas, but it also makes me really, really hopeful as a consumer, right? Hopeful for the future because of how easy things are becoming for me as a customer of any financial services. But I would like to get view of the panelists themselves. And what are your feeling about the situation? Has the future arrived early? Ebru, what do you think about that?
I guess so. I think that what happens is it's really brought the digital world to the headlines of everybody in the world. So what we've seen is all of the businesses, like you said, that were geared towards a digital business, they did well during the lockdown. All those that weren't and had not considered their different channels suffered lots of losses. What this meant for the customer is that some people suddenly found new ways of shopping and getting the essentials that they needed, but there was a lot of people who weren't getting what they needed. So a lot of people were excluded. And whereas we have come a long way into the future, and it's really catapulted us maybe 10 years of development into the future, it hasn't really brought us immediately to a place where everybody feels comfortable shopping in digital channels. I think that a lot of people felt excluded, and even with all of this news and media about it, some people still weren't aware that there were different ways of obtaining the essentials they needed, which actually we saw the queues and the issues people had to obtain basic things which they could have ordered online, and everybody who was quite digital savvy just ordered it online and didn't even worry about going outside, and they weren't worried about products not being available either. So it's definitely brought the attention of everyone to the digital space.
Great. Really good insights there, Ebru. And your views are very important because you work in the industry as independent consultant. You get to see views from the vendor space, views from the financial services space, and even views from the merchant space. And talking about merchants, I mean, I look at Martin. Martin, what do you have to think about that? Do you think, I mean, we are in the future already? It does sound like exciting times, right?
No, it is, and I think we're probably all aware of the innovation adoption life cycle, the sort of traditional bell curve that we see, and from sort of our perspective, what we're seeing is that is shifting. The laggards are coming further to the left. Everybody's shifting to the left. So it would be really quite interesting to view that and see if it's changed the shape, if it's flattened that bell curve. I think a lot of the technology exists, and particularly in this space, a lot of things that we call innovations are sort of 10-year innovations, but it's the adoption, and I think we're definitely seeing the adoption bell curve move to the left.
Yeah. And Sheldon and Vicky, coming from the other side of the pond, coming from a financial industry, the big names out there, what do you have to say about the situation right now? I know that there are so many innovative projects which are running in Barclays and RBS currently. I mean, how do you feel about this situation right now?
Yeah, I mean, first of all, some of us, I think, will think, maybe we should just skip 2020 altogether. So let's just fast forward to the future. Yeah, but I think, I agree with my fellow panelists, opinion in that I think there's definitely been an acceleration, right? It puts a sharp focus as us as service and product providers, right? We're all businesses. That we need to think about how can we serve our customers much, much better. And actually, I would say, a lot of the tools are there. Some of it's kind of ancient, as Martin mentioned, right? So we absolutely need to figure out how we can do better. But I think that the key word that I think we've learned over the last 6 months is actually resiliency. It's we serve our customers in different channels, right? Branch, website, telephony, and whatnot. There will be certain channels that will go down, especially during a pandemic. So how do we make sure that we have disaster recovery and resiliency playbook to make sure that we can serve our customers? So I think we are forced to see the future and kind of be much more resilient in our planning. But I can't wait to 2021, put it that way.
So Vicky, I mean, taking cues on that, I would direct my next question to you. All this is good, right? But it does create complexity, isn't it? I mean, for people like you and me and this panel in general, I mean, we are considered to be power users of digital channels, right? I mean, we think that, yeah, this is how it should have been all along, right? But there is a very large population. There is this significant bunch of people in the world who haven't used digital channel when it comes to financial services before, right? For them, it is, I mean, of course, there can be many reasons why they did not. It could be age, it could be, I mean, apprehensions, whatever. But in these current times, they are now forced to move to those channels or start using those channels, right? I mean, it used to be very simple for them to just take their ID and go to the bank, walk to the bank branch and get their needs served. But now they have to, experiment with downloading an app, I mean, getting their biometrics done, scanning their face, using a card reader and remembering PIN and passwords and things like that. With so many new internet newbies, consumers coming online from so many channels, as Sheldon said, I presume the native digital companies and institutions which are going digital now have a big challenge on their hands to keeping it simple, right? I mean, what are your thoughts? That was a very big question, but I just wanted to give some context for that.
Thanks for the question. So I think just my own humble opinion there. So I think like keeping it simple is one of the criteria, as one of the most important criteria, but not enough. So I think at least people who are being forced to use digital channels, but they have not been used it before, I think two scenarios top of my head. First is they're super cautious about the privacy and security. Second is they just don't find that digital channel suits their needs. So I'm sure there are many more, but I think just focus on those two. The first is, I think in previously some customers could be just super cautious data privacy and also prefer channels just with physical interaction so that they can actually say, okay, there's cash in my hand and they give it to you, right? So the down transaction. But then I still have friends, regardless of their age, they just refuse to use wireless payments because they're just worried, like you never know their money is gone. And some other friends who refuse to register anything using a credit card because they're just worried their credit card details got hacked, which happened to me myself many years ago, but still does not stop me to use it because it brings me convenience. So I think so therefore I think security, beyond simple, security is a fundamental thing, at least in my opinion, that because if there's not secure, it doesn't really matter how simple it is, right? So it is. So therefore, I think there's challenge for the bank and for any other organizations to balance the simplicity and the security. But then I think that brings us to the second point is if that is smart enough for fixing with another group of customers who just find that certain digital channels that just do not suit their needs. Physically, they find that it's not necessary. So why should I talk to a chatbot who never understand my questions? Or I just pick up my phone, just call a real human, so I can complain, right? I can release my emotion. So I think that's where they being smart kicks in. So it's all about first meeting the customer need, solving the actual problem. The second is a balance of the simplicity and security that we just mentioned in the first point. So when that customer finds that this is necessary to this channel is necessary to make their life easier, so they would potentially compromise on their other preference in terms of, I guess, not being so simple. You have to do multiple clicks in order to get that. That is fine as long as it's my need, or not being 100% secure because every new thing comes with a risk. So I think that is my opinion is being simple, but also secure as a fundamental principle, but being simple and also smart.
Yeah, it's funny that you, because one thing registered in my mind was the use of chatbots. I call myself as a power user among this panel, but I completely refuse to talk to chatbots. And when I go and visit a website, it's just not me. And I would like to call somebody in the contact center and, as you said, let it out. Always works, right? But you did touch the point of security by design, and I think that's very, very important. We see that currently or the current situation has actually kicked off not just a digitalization programs within almost all organizations, but it has also created a environment of race, right? It's like in the automotive world where Tesla now leads the electrification of automobiles, right? And every company out there is playing catch up, and this is something which I see happening in space also, where people or the companies who had who were already looking forward or already had taken first steps, they are the ones who kind of winning that race, and people are not trying to catch up with them because as I said, this situation is forcing a lot of consumers to go online and actually try to attach with the companies who have been offering it already or who can offer those kinds of services, much faster than the others, right? So, but when there is a race, there's also a risk, and this is something which the history has taught us so many times in the past. And this actually takes me to my next question. Maybe Shelton, you can take it, right? Where with the requirement of keeping it simple and ensuring that the customer, you don't lose customers, and also can gain as many customers as possible because of this the situation of or grayish kind of a situation, unclear situation, which this situation brings in, do you think that, the customers actually get maybe getting exposed to more fraud and risk, or do you think that as part of this race, the security and fraud checks might be taking a back seat? What is your view on that?
Sure. When it comes to fraud, I see it less of a race than a 30-round boxing match. Because it's always a constant struggle between, creating fraud defenses, mechanisms, right? But then I would say, fraudsters can always find the weakest link, right? So I think it's a marathon, not a race, put it that way. Right? Maybe boxing matches are a little bit too violent, too fight club. Yeah. But I think there's definitely something in it that as you find new ways to protect certain channels, there will be certain things that you leave behind. In our example, right, e-commerce, huge focus today on card not present transactions. So we are doing a lot of stuff, right? My fellow panelists all would agree, to protect our card not present transactions, right? Mm-hmm. But what about other channels that's left behind, right? I think our mail order, telephony order channel, Moto, I think is one that's quite exposed, I would say. So our fraud partners actually says, hey guys, you need to figure that out. Face-to-face, contactless, maybe less fraud rates as well, but we have seen a lot of cases where there are definitely kind of deficiencies there. So I think we need to be balanced between racing versus being in control to make sure that we have the right kind of systems in place to again, not expose the weakest link as much as we can. I think that the one example I'll also give is in terms of what Vicky mentioned is that I think there's something around, security and simplicity versus complexity. In our retail banking unit within Barclays, we have a lot of different authentication mechanisms, right? Obviously, Abhijit, your company provides a lot of that. We've got one-time passcode through SMS, right? We've got, one-time passcode through app. We also have, again, in our retail banking business, a way for you to tether your mobile phone so that you can authenticate just using an app without any one-time passcode, right? So it's tethering, what we think you are, you own that, security. Really simple, really, a slick customer experience. That's live now. But when we went to customer research for our customers, they got confused. They actually got suspect. This is too easy. Am I doing something wrong here? Am I actually being, is this a fraud thing? So making it easy sometimes in the first place might not be the best thing to do. You might want to create that friction by design until you establish your trust. And then, customers can get used to it.
Very friction by design. That is something which, if you bring in front of your marketing team, you would actually get stabbed behind your back, saying that no friction for our customers. But that's very interesting viewpoint, Sheldon. Ebru, Martin, would you like to add something on that about some risks which this race of going digital maybe bringing into different ecosystems? What about travel? Martin, you might have seen that in the past, right? Where, when Skyscanner may have started, or some other companies you have worked for in the past, where there is a phase to just focus on growth or focus on, getting the technology sorted. Do you security could be taking a hit there? Martin, you're on mute, I guess. Okay. Ebru, would you like to go?
I'll jump in. Okay, I can't answer the airline bit, but in terms of streamlining so well that it creates risk, I have 2 points. And one of them is that quite often I see sometimes you see marketing or UX teams want to create such a good onboarding experience that they're not considering security measures. And when we mention it, they think, don't let people sign up. However, they don't realize that they're letting people into an ecosystem of trust. And sometimes when you are talking about fraud prevention, you are using rules. And everyone who's native to fraud knows that rules help us define what is fraud. And at the end of the day, unless you have a really sophisticated artificial intelligence software embedded into your platform, you are relying on people and their understanding of fraud. So if I'm going to create rules where I'm talking about time and period, then I'm going to start assuming that I can trust customers that have been around for a year, isn't it? That's a safe assumption to make if you think about it. But then actually, or through the onboarding process, because we haven't vetted the customer, they've just entered my sort of ecosystem of trust, and now they can bypass some of the rules. I mean, obviously, I'll put so much more complexity in my rules, but what if they keep sort of finding a happy path to wade through it, surf through all of the rules uncaught, which they do. And they find different channels where they might actually evade rules. So they will look at different channels like mobile, where there's an air of trust created because of all the partners that come together. So you've got an excellent onboarding process at your checkout, made it really super easy for your customer to check it. I mean, get an account, get on board with you, and you haven't checked it because there's no real transaction there. There's no real financial risk at that point. You're just collecting some information like name and email, which is useful to your marketing team, but actually it's not vetted information. And so then you put them through to your mobile app where you are using different apps like Apple Pay, Android Pay, and Google Pay. And while Apple Pay is so much more fraud resistant, it's not chargeback free, the other two are open source payment methods, which allow people to change and configure these details as much as they want. So now you've got all of this happy path, which by the way is blocked for everyone now because they realize that this happened a while back. People kept on getting through, and they realized that actually if they just sign on desktop and then go to their mobile and just check out with this method, happy days, because they've entered and sailed through a path of trust that people hadn't considered the implications of when they were, sort of welcoming customers in with open arms and making it super easy for them to sign on. I think that some of the friction is necessary, and also for even our panelists mentioned their friends don't want to use their credit cards online because it's happening. The credit cards are being sort of taken over, and how do you stop that? By shopping with people who are very responsible with your payment details, so that if they do the necessary checks and you can see that, then maybe you can create more trust towards that merchant instead of someone who makes it just too easy to check out, which then leaves you doubtful as to whether it's just so easy somebody else can do it, so account coders are reusable. So I think that's something to consider.
Great. Martin, were you able to sort out your audio? No.
I can jump in sort of elaborate because I really agree what Everett just mentioned, is that ecosystem of trust. Because I think these days it's not necessarily more risk, it's that complicity of risk, where internally you become more invisible. It's the risk of fraud goes beyond you're just calling you or sending you an email. It's sort of embedded in just multiple cloud platforms, different database. But then from the banks, and we work with merchant, with big corporate, with small businesses. But I think that one of the complexity is what that liability of fraud and security, because if, for example, if I pass on your data to the downstream merchant, am I liable for the data leakage at the end of that chain? And if I do have use in your digital record, it is subject to any kind of cybersecurity. So am I liable if you didn't do what I instructed or recommended? I think it's just difficult. It's like some kind of like gray area in the middle. I think as bank, we cannot tell customers that, well, we'll give all your terms and conditions here. You agree, you click yes. If anything happens, you're on your own. And that is not what a bank's supposed to be here. Is we have to go beyond what's minimum required by the terms and conditions or law or regulation and protect as much as we could. But then how far we could go, how far we could afford to go, we can cover. I think that is complicated for the bank, also for the partners embedded in this ecosystem. But as again, think it's more tricky to, as Sheldon just mentioned, it's tricky to explain to them how complicated this is. And maybe the more you explain, the more concerns that rise from customers, like, hold on, I don't understand a single word you just mentioned. Does that mean this is super dangerous? So I think that's where I see the complexity of the risk comes from.
Yeah, absolutely. And I think one common theme which is coming out of all of your responses, Vicky, Sheldon, and Ebru, is security by design, right? I mean, where all of you have touched the point where there has to be something the consumers have to latch on to feel that they are secure, right? Because we know that the security is only as strong as the weakest link in the chain, right? And the problem with the current situation, which I see, and I would like to get any of your opinion on this, is with so many people coming online now, right? And as I said, being naive to the online and digital channels, it seems like they are consciously being targeted by bad guys in terms of account takeover attempts, phishing attempts, because they are just new to all this, right? They don't know. I mean, if a person calls to share the OTP, not to share the OTP, or I mean, how does a communication channel on digital looks like if they are actually getting calls from somebody else? I mean, should they trust it? They should not trust it. And even what we have seen in Telesign is that even the bad guys during onboarding, they try to break the system, right? So there are channels or technologies used to, have a much more smoother, much more digital channel-based onboarding. No need to have a physical presence. For example, you scan your face, you scan your ID cards and things like that. But what a person or bad guy has to do is to just break that flow somehow. So to ensure that the scan did not go properly, or the face was not scanned properly or something like that, so that they fall back to the traditional way of onboarding, so that they can actually do what they were already doing, right? They still get exposed to that old way of doing things because that channel still exists. What are your views about it? Do you see those kinds of patterns, new kinds of risk coming in, or maybe the old risk coming in new forms in the current situation? Anybody, I mean, please feel free.
Okay, so I think what's happening here is I sometimes talk about ethics, and I think this comes into play that merchants have to take the responsibility to make sure that they're not creating these patterns that fraudsters can easily duplicate to defraud the customer who's shopped online, which is what we see. And you talked about the phishing scams. People can get texts saying, could you just fill in this for HMRC or for PayPal or for these various different providers, and people think these are legitimate because they look like it. Sometimes they look more real than the real thing. And so there needs to be an element of education from the merchants, but merchants always feel like that's not their job to do, but it's actually something that is their responsibility. So you're asking somebody to shop with you and interact with you online. You need to bring that to their world sort of offline, connect it in some way. That's why OTP has been very successful. But fraudsters find different ways of getting around it. So we need to make sure that we say, here's your OTP, don't tell anyone this code, and you should enter it in the box only when you're prompted. And just information like that. And I'm noticing that quite often, whenever we up the fraud prevention rules, the fraudsters are getting more sophisticated. And sometimes I find that they're investing in better technologies than the merchants because it's a very lucrative business. Can
you give some examples there? Ebru? I mean, because that is very, very interesting for anybody in the audience to get a view on.
Okay, so there are lots of examples in terms of, you mean the software that they use?
Yeah, I mean, software, or what kind of techniques are they using to bypass, these newer controls or newer checks which have come into the picture?
Yeah, okay. So there's the scammers that are just calling people up and asking for their OTP and telling them they're going to give them various refunds. And then as soon as they're shopping online with a very luxury retailer, they get the OTP, they check out, and they use account takeover methods for that. And then in terms of the fraudsters, so when we put in fraud rules, they buy technology, so bots. Everyone knows that there are bots used for registrations, and they're also used for card rolling. I've once come across somebody who'd entered 25,000 unique card numbers into a checkout in one session. And because there are little things that people aren't looking into in their checkout, for example, once you've passed on the API call to the bank, what happens to that slight window where you're no longer doing any checks and the details can be amended? And because these fraudsters are very sophisticated in terms of the technologies that they pay and adopt, they can card roll in that very, very small window without being subjected to any of the fraud rules. And we see that happening quite often. And so these are things that people have to look into. And quite often merchants think, oh, why do I need so many fraud prevention software when I can rely on my staff, which is great. And staff and systems should be incorporated so they work seamlessly together. But ultimately, to catch something like 25,000 different cards, there's no way one person's going to catch that. It happens in the space of like 5 to 10 seconds. It's not possible for a human to detect that. So you need to have systems that detect things like this. And for a lot of merchants, they don't consider that actually you need to monitor your checkout to see if the strokes, like the finger strokes of how things are typed, are a human being, and if it's possible for a human being to type that fast. And it's not. I mean, I don't know anyone who can enter 25,000 card details in like 5 seconds. I can barely enter one card details for me. So these are things that people need to look into because fraudsters are, and they're investing heavily into this software.
Yeah. Oh, that actually. So, Martin, are you sorted? Can we try again? No. Oh, this is sad. Okay, maybe Martin, you can try and connect again. Let's see if that works. Maybe directly on the computer audio, because we would definitely like to get your view. I mean, you are the face of merchant here, right? And your industry is so amazing to learn from. So, I mean, as soon as you sort it out, please do. I mean, shout out, and we'll be more than happy to direct some questions to you, because I mean, it's actually sad. So moving forward, right? I mean, Ebru, you actually touched a very interesting point where you say that systems should be used for decision making, right? Our companies have been using systems forever, but now there is this huge emphasis, or I would say cult-like situation where everybody's going in the direction of machine learning and AI, and but in order for that to be successful, of course, it requires patience. That is something which we all know, but it also requires data, right? But data, I mean, data is a very interesting topic, right? Because data can be anything, but there is good data and there is bad data. There is more reliable data for decision making, and there's less reliable data for decision making. What do you I mean, in terms of data topic in general, what are some of your general views about using high quality data, or talking, or maybe just talk us through how a reliable data differentiates itself from unreliable data points when people talk about using them within their fraud decisioning engines and machine learning.
Okay, so like you said, data can be read in any way, and the way that I say is data is like a deck of tarot cards. Whichever way you cut it, you get a different reading, and the outcome and the direction it sends you is completely different. And that's why you really need some educated eyes looking at that data, because data could mean different things to different people. And by that I mean, if a marketing person looks at all the sign-ups, they think that's great. But then if a finance person looks at all the chargebacks, they think, actually, I've just had so much more losses, so all of those influx of sales wasn't so great because I've still lost money. So it's about looking at the data with the right angle in an informed way. So sometimes you see an influx or a decline in any kind of data. You need to look into the whole business to see if there's a reason for that. And sometimes a lot of businesses allow for bad traffic to come through because they're more interested in expansion than to control their fraud and chargeback rate, which could happen. And if that's happening, that person looking at the data needs to know that, because then to them it looks like a fraud attack and all these undesirable things are happening. But actually, in the other parts of the business, you're working against someone who's trying to just create awareness of the business and it's not so mindful of any chargeback rates or any negative impact of that. And I think there needs to be a collaboration to make sure that there's an understanding, which is why card schemes actually impose rules on what the percentages are. And I think that percentage can guide us to make sure that we can use that data correctly to do the things we want. So when we look at authorization rates, we need to understand why that's happening and how we can change that positively, but what that means for the business as well. So it's not always a good thing to increase sales in a territory when your supply chain can't cope with the demand. So imagine if I said to a finance director, excellent, I will increase all of your US traffic overnight, we'll go from 50% to 99%. Sounds great for marketing team. How does the warehouse manager feel about that? Because he probably doesn't have the stock, they don't have the capacity, they might not even have the stock, which is not great. So there's a lot of things that need to be considered with the data, and the data's always existed. So all of the parties, like fintech companies, have always given rich data to their merchants, but there hasn't been people that received it, that read it the right way, or was interested in what the data was saying. And I think that's what needs to be worked on. Merchants need to focus on what the data there is and who's looking at it. And I think it needs to be someone who's more looking at the technology side of it, more like a fintech department, who can decide if this serves a good purpose, if this data is meaningful and I should use it to change some business processes, or if it's just something I should accept that is the case. So I think it's just looking at the data through sort of knowing eyes, I guess.
Yeah. Very valid points, Ebru. So Vicky, I'll switch gears and throw some curveballs towards you. So, I mean, more data, always good. I know I had conversation with Sheldon also in the past. Everybody looks for as many data points as possible, but that, like people say, with more power comes more responsibility. With more data also comes more responsibility, and also the topic of ethics, right? There are so many regulations around it. How do companies ensure that they use data wisely, right? I mean, how can you maybe take just a couple of minutes to just let us know your views on, how the businesses are ensuring that they take right decisions with the right data, and while not crossing some of the ethics lines out there.
I think that is a very good question. I don't think I have necessarily a very simple answer to that, but I can only address how important that data ethic is, because I think absolutely the more data means more power, meaning that you could physically develop any kind of model using them, any kind of insights, right? So it could be a model or fraud detection model, or just transaction monitoring, or just build a risk profile of Western customers. So it's powerful, as it suggests. But meanwhile, more data absolutely means more responsibilities, meaning that all organizations have to consistently aware of any potential ethic problems when dealing with data, making sure that is, no matter what kind of model that you're going to build to predict whatever behavior of customers, and there's no biased decisions and no discrimination, whether it's intentionally or unintentionally. Because at the end of the day, I think data with models, these two powerful tools, are sort of double-edged swords. But isn't the decision-making still down to human, at least at this stage, right? We're not quite in the very future with a picture probably imagined by Elon Musk, right? It's different scenarios we're talking about right now. So I think it's internally, the complication remains in the area that how organization can really put this responsible data and technology at the heart of digital strategy. So that's something that is belong to the senior leaders. They have to be really address this question, this problem, more than what they're doing now. The second is really to think about all the potential measures to avoid that conflict of interest between a financial target and that social responsibility. Because, for example, if lots of initiatives are trying to address the digital inclusion, provide that universal coverage or accessibility for the vulnerable customers, is how do we balance that priority with, on the other side, you got a financial target to hit. And the third is really make sure that when employees, every single employees, including us, every single of us, when we're dealing with these data, how do we, again, consistently aware of that, consistently value, I think, that data ethics and the customer privacy, so that you don't accidentally, basically do not create that unethical blind spot where you think there's a small thing. I've got this trillion customer data where I make excellent comments on them. I don't think it's big problems, but it is. So I think any company's culture should address that more than what they're doing again right now. And externally, I think, again, for the bank, at least for financial organizations or any other financial institutions, it need a joint effort between all the banks and insurance, payments, and fintech on just governance and customers themselves to really draft the IGL sort of policy framework to make sure that whatever GDPR it is today is up to speed what is the what technology has evolved in the past few years. I think that's my humble review. Not sure that is actually give an answer, but potentially bring even more questions based on your original question.
That topic is such, I mean, it always brings back more questions than the answers. But every response, I think everybody goes in a better direction. So I think it's very, very relevant what you just said, Vicky. So Sheldon, I mean, if you talking about good data, right? We all have this situation where phone numbers now have kind of become a de facto way of correlating a bunch of numbers with an individual. People change their phone numbers much less. I mean, it's kind of a constant. I mean, if I ask this panel itself, I'm sure that some of you would have held your phone number since, I think, a decade now, right? And so the point here is that considering it's kind of a constant, considering the fact that it's now has become one point of constant in various businesses out there, especially financial and other digital channels. And Sheldon, you can also pitch in here. I think I can hear some sounds from your side, so I think you're sorted. How do you see phone number and intelligence around it to be useful in your respective spaces, whether it's a digital channel like travel industry and whether it's financial institution like Barclays? Why I ask that question is because both of these domains have used phone numbers since ages, right? Either for customer interaction, for booking, for OTPs, for many other different reasons. Do you think, phone number as a data point and more intelligence around it could help the ecosystem?
I think it can. It can. And, the likes of phone numbers, email addresses, and your traditional data points, like date of birth, address, and all that, in of itself, they're not that useful, right? It is just one data point. But if you were to combine them all, right, that's when you can actually, be able to triangulate, right, between, who you are or where you are. From a phone number perspective, I think it's both an identifier, but it's also a channel of communication, isn't it? Right? You get your phone number, 11-digit, right? In the UK, you, as you say, Abhijit, you probably hang on to it, over the last 5-10 years, so it becomes part of you. But it is one where I get calls about PPI and whatnot all the time still, right? Because as time goes on, that phone number gets cascaded across everywhere. Everyone has access to it. Right, so as an identifier, great, but it becomes quite exposed. But if you add different data points, or even better, kind of different technologies like SIM swap, right, where you can identify your phone number, your SIM and who you contracted with, right? In terms of a telco company, that becomes more powerful because you can truly triangulate who you are. Is this truly you? Have you been using this? And I think that becomes useful. But I think the challenge, I think, for us, and going back to kind of what Vicky was talking about in terms of data stewardship, is at least for a financial institution, because we're so heavily regulated, we're obviously very concerned, but we're less concerned about security because we've got tons of that. Everything we do is all about security, right? It's about GDPR. We're more concerned about how we use that data, because oftentimes we're so secure that we can't even share that data across different business units, even within the same company, right? Or over time, we're so secure that actually the data is housed in one system and then it's just not available in another system. So to me, that data stewardship actually becomes even more important, especially if you want to make that onboarding journey or any kind of customer journey as easy as possible, especially when you start kind of fertilize between business units within an institution or even more within the ecosystem. So to me, kind of that data stewardship and being able to kind of share, right, becomes more important. Security, obviously.
Great thoughts, Sheldon, there. And I should remind audience that if you have any questions during this session, you can actually use the Q&A panel, right in front of your screen and shoot out questions to us. We are going to take, as many questions as possible at the end of this session. We are, I think, just a couple of minutes away from, ending this panel. So if you have any questions, please shoot to us. It could be as basic as you can imagine. Please use the Q&A panel to shoot out some questions towards us. So Martin, what are your views about phone numbers and their use within the industry? I'm sorry I haven't. It has been unfortunate to actually being able to use you at the end of the conversation, but yeah, I would definitely like to get your view on that topic overall. Yeah.
Sure. Can you hear me this time?
Yes, absolutely clear.
Sorry, I apologize to everybody for that. So for us, the telephone data is very relevant data in authentication. And really, like any data point, the question is it still current? And I think, as Sheldon was saying, it's one of the most durable data points because people do tend to maintain their phone numbers. And the only other question then you really need to answer is it compromised? So I think as one of the factors of authentication, it's a very strong one. And in addition, as Sheldon has also mentioned, it's not just an authentication method, it's a method of communication. I know there's some concern around that if the number is compromised, then there's a level of there. But from our perspective, it's a very important data point.
Great thoughts, Martin. What I'll do right now is I'll switch back to what we as a company, Telesign, has to offer in the area of phone number intelligence, and so that we can actually I don't know if you can see my screen again. Yeah, okay, great. So because we are on the point of phone numbers, at Telesign, whatever we do is around phone numbers. It's at the center of everything which we do. So if you talk about, but if you consider the use of phone numbers right now within any industry, most of the businesses actually use it for verification purposes. That is phone number possession verification, or maybe transaction verification, account update verification, in terms of using it as a channel to deliver two-factor authentication or SMS or voice. But we believe phone number is much, much more than that. It can not just, help customers, confirm possession and existence of a phone number, but it can actually provide some very unique views and fraud insights which could be associated to a particular account. And it's extremely useful at the point of onboarding a phone number is collected, because we have seen us, making dramatic impacts in the chargeback rates of merchants. We have actually helped, banks and financial institutions sort their, application processes where they see a gap between the documentations which are provided versus the phone number which is actually provided against the account, and the correlation between that. We also help a lot of businesses out there perform, contact KYC match based upon phone number information or the information in the operator records against that particular phone number versus the application details which they have filled in. We also can actually help confirm the ownership, and we have touched the point of SIM swap and porting, and phone number being compromised. We just not look at phone intelligence, but we can also help businesses out there confirm if the phone number could be in a compromised situation, and if yes, then they can, their risk engine can actually decide what to do next, or if they would like to do a more friction or more step up verification with the customers. And we do it not just based upon the operator records. As I said in the initial part of this session, as Telesign, we are already connected to most of the major telecom operators out here in Europe and the UK. We are connected to all 4 operators in the UK already. We have group connections with most of the major names in many different countries within Europe, with which we can actually help perform real-time operator checks, whether it's SIM swap or performing KYC match and getting a telco reputation against a phone number. But not just that, but we can also help you identify holistic risk associated with a phone number if you're seeing a particular phone number for the first time within your ecosystem. So at the point of onboarding, we can tell you how safe or risky that particular phone number is from the fraud and security perspective, so that you can then take much wiser decision to allow or disallow that customer to join your ecosystem. And we do it all using extremely strong machine learning platform, which actually combines data points from our customers who use us for online user verification, but also from the communication side of the phone numbers through the data sets which we actually get from our operator connects. And apart from that, we also perform some research and development around the phone number intelligence, which also goes into the machine learning platform to identify a holistic risk associated with phone number at any given point of time. And all this we delivered in real time using APIs. And I'll not go through this slide in detail, but I just wanted to give you an idea of how you would actually can help use phone numbers within the onboarding flow to perform various different checks just based upon, the phone number as a data point. Customers use these data points in combination with other risk data points like device and IP and email. But on top of that, they can also take decisions just based upon the risks of the phone number identified through our platform. And as you can see, there are many other checks, and all of them actually work in background. There is no knowledge or there is no friction, additional friction, which is actually brought in towards the user. And all of these checks can happen, in the background, and the policies can be created, which the end user may not even be aware of. So yeah, we had amazing success stories to share from around the world, and you pick up any domain where phone number is being utilized for some of the other purposes, you'll find Telesign being quite effective in terms of fraud risk detection and security in that particular space. So with that, I would open up the floor for question and answers. And let me see if we received any. Yes, we actually received quite a few. So one question is great point, Sheldon, on data stewardship. Isn't the best steward the owner? The owner can share their data across all your lines of business. What do you have to say about that, Sheldon?
Yeah, so I actually emailed Simon Wilkinson back. So thank you for that question, Simon. I think it does. You know, the owner starts with the stewardship starts with the owner. I think that the trick here is then, you know, what about the delegated authority? First, you need to have an ecosystem to be able to share within your business or within the ecosystem, right? You know, different companies. But then it's how do you make sure that you delegate the stewardship and the accountability across that ecosystem as well? That's the trick. Obviously, no silver bullets, but I think that's the one that will be an evergreen challenge for all of us.
Great. So I guess you guys were already engaged with the audience here, answering some of the questions. But let's have these questions answered for the larger audience who may not have used question and answer panel before. In that context, friction and secure at POS, what do you guys make of biometric card, fingerprint card? Martin, would you like to take that? Because I think I see that you already answered over the mail.
Yes. So from my perspective, it's great technology. I know the COD the COD schemes have been working on this and trialing it. I think my only concern is it's quite expensive from a COD issuer perspective. It would be interesting to hear what the COD issuers have to say on it.
Okay. Yeah, Sheldon, you want to go ahead?
Yeah. I think it's a great technology. You know, I think it's the cost needs to go down, but it is 2 to 3x, I would say, more expensive than usual plastics right now, and then that becomes prohibitive, isn't it? Right. But yeah. I think there's a long way to go, but I'm pretty sure the more we can scale that, that the cost will go down.
Great. Yeah. I mean. At the start of any good technology, the cost is always the highest barrier, right? Another question which I think Targ has put across. The earlier two questions were from Simon and Antloyd Perks. So Targ asks, do you think that centralized due diligence will be a regulated activity in its own right in future? Centralized due diligence. I see Vicky as one of the brightest minds here to take up that particular question. Vicky, what do you think?
In terms of sharing intelligence across the ecosystem, I'm not sure if there's a proper answer, but I guess as because now we're looking at platform ecosystem economy, see more and more collaboration in forming this ecosystem. So at least from a incumbent bank perspective, we are actively working with a wide range of fintechs, technology firms, and also merchants, even businesses, corporates, to basically the fundamental driven by come up with a user journey or a product that is just fit for purpose, that it can help making customers' life easier. I think that is sort of more underlying principle to facilitate any kind of collaborations, especially with regulators, to make customers' life easier, but also on the other side, protect customers, their information, their financial assets, and across all their life perspectives. So I'm not sure if that is actually sharing intelligence, but I think it's definitely increasing level of collaboration, especially during the COVID. So government's initiative with all the banks the loans helping business, personals, especially vulnerable customers to meet their financial needs and their life needs. So I think it's a definitely increasing level of collaboration and sharing efforts, intelligence, resource, and technology-wise,
Yeah, and so I think I'll spin off this question to some one other point. So Ebru, if you would like to take that up, centralized due diligence. Don't you think that might be that concept is a bit different from crowdsourcing based intelligence, right? Where the companies or vendors or any platform can actually share intelligence with each other, which have shown to be quite beneficial in fraud protection. But centralized due diligence, while it's a noble concept, don't you think that could actually lead to a situation of single point of failure?
Yes, I think it's already happening. I think it's just that we haven't considered that it's happening. So governments are using it. Anyone who's in the UK will know that if you need to get a driving license, you don't need to send a picture anymore. If you have a digital passport, they will just export all of your details from your passport into the driving license. So therefore, they already have a good source of information that's verified, and they've just passed it along. And I guess that is the government sharing it with its own branches, but there are businesses who are buying licenses to use some of this and using things like electoral rolls to find out where people are registered. So there's already a movement for that happening. But in terms of it being quite centralized, I think that it does need to be regulated, and it probably does need to be government-based to make sure that nobody's getting too many monetary value from any set data sets, and it's more like a sort of querying database where people are getting good information out. In terms of what I think it does for like single point of failure, this is correct as well, because not everybody wants to give all their information, and so they will always be missing information anyway. So there's always going to be private companies that do this as well. And I think similar to GDPR, we need some regulatory boards that actually decide what can be checked, because a lot of merchants and a lot of different industries are checking whatever they want to. There are industries that are checking people's bank statements, full bank statements, including all of the activities, which may seem necessary, but actually is quite intrusive to people's privacy and their just day-to-day life. And there's a lot of information in their lives unnecessarily at times. And so there needs to be a regulation that's probably government-based, but then other companies will start collating information that they constantly verify. And like you said, in order to make sure that it's not a single point of failure, it needs to be lots of different data sets. We should never have to rely on people's postcode or just one digital data set. It needs to be omni-channel. So it needs to be something that exists in the physical world as well as something that exists in a database, so that we can cross-reference it.
Great answer, Ebru. And thanks a lot for that. And I know that we are a bit over time, but thanks to the audience for being patient with us. I hope you found this session extremely useful, and I thank again all the panelists who actually shared their knowledge, learning, and the experience as a whole with the audience, and also shared some of the forward-looking views on some of the topics or some of the challenges which are occurring right now in the digital everything times, right? And thank you so much. And I hope you found this session useful. Thank you, panelists, and thank you, FinTech Connect, for organizing this. I'll see you again sometime next time. And if you want to reach out to Telesign, you have the coordinates in front of your screen. We are also going to share the recording of this session with you. So yeah, see you later.
Bye.
Bye, everybody.
Thanks all.